Tapan Doshi also, research analyst at www.tapan.in, joining us now. Tapan, your view overall in general with regards to where markets stand.
Yeah, good afternoon, Mahima. See, first of all, congratulations to whole women fraternity, and now congratulations women Indian team for winning the World Cup, Indian women team. Now talking about the market, guys. No, if you see, the market is somewhat consolidating, and one of the reason is that all the major positive things are already factored in. See, one of the major factor was that a Trump and India deal is going to happen. Sorry, US and India deal is going to happen maybe November and or December. That was one factor, and the earnings season is okay only. It's not so bad, and whatever numbers still coming are maybe in line or little bit above line. So very few are going down actually, and that is what actually impacting the market is keeping around 26,000 level. But from here, I think the upgradation should come from this October to December quarter, and that result is going to get from first week of January. But if we are able to close the deal, India-US deal between around November end or December, I think that will be the next big trigger point, because otherwise there's no as such a big trigger point other than the earnings season and the US trade deal. So we have to wait for that. But yes, it's a stock specific market. You have to check the results, and accordingly wherever you get a good entry point once the market is, I think this is a time to accumulate. Overall, I am positive on the market. Even if you see the GST collection is good compared to, even though the 22nd September the GST cut was there, so collection is quite good at 1.96. Even the auto numbers are good, so things are positive comparatively.
Absolutely.
Let me get in Tapan to get his quick view. Tapan, what are you making of the initial fine print that has come in with regards to where Tata Consumer goes? Because the stock is seeing a spike right now. Your top line, bottom line margins, all the three numbers are above your consensus estimates.
Yeah, I'm quite positive on Tata Consumer, and even the numbers, see, it's quite better. And now if you see, very few FMCG company, even because of GST cut, is able to show double digit, because they have to do some adjustment. Their brand portfolio is good. Even the margin expansion is slowly and gradually kicking in, and you can see in the profitability also. They are going to launch some premium products also, and the international division is doing good. Even the segment-wise growth, tea, coffee segment is quite doing good. And looking at the result, current result, whatever you're told, I think it looks good. So yes, this is the stock now one can accumulate for a long term, slowly and gradually.
Tapan, I want to ask you two questions. Coal India, ONGC and Oil India. Three stocks that we are watching out for when it comes to dividend plays. With the kind of performance so far in terms of FY26, would you advise investors also to play or invest in any of these counters from a dividend yield perspective?
See, my main, I think, focus will be on oil marketing companies, because of course oil is remaining low. That is beneficial to them. Their margin is improving, even though if you see the last quarter result also, the margin was improving. And here I will give name of, of course, BPCL, HPCL and all that. And they will do well from here, because the reason is simple, because their margin expansion, and plus oil is going to remain below $75 at least for one and a half. That is what report says. So I think lower oil will benefit them, and again it's been steady from long time. So that is the reason I think this is the play. I think one can play. I think at every level they can they can buy. It may give a decent return from here.
So I'll quickly come to you on all of these names. Any of these counters that you are liking in this space, and if you would be a buyer right now?
Yeah, see, the auto numbers are quite good, and most of the automakers have performed well. Now, if we take all the segment, first of all, let me talk about two-wheelers. Of course, TVS is beating estimate for long, and I think that that is a candidate which I will always go for it. But it will be buy on dips, not on a straight out buy, because the stock has gone up a lot. But this is a stock now one can get into it, because in EV it is performing well. And again, when we talk about passenger vehicles, M&M and Maruti, these are the two stock one can keep in mind. Their sales are strong, and they're doing good. Of course, their SUV is doing good. M&M, even EV also doing good. So I think at a dip level, I think every dip one can start accumulating that one. And in the passenger vehicle, my focus will be on Ashok Leyland. Ashok Leyland has given a very good number. It's been performing from last few months. The numbers are coming good. So yes, Ashok Leyland will be another stock which you can buy even at this level and at a deep level.
Okay, Tapan, from the names that Varsha has mentioned, Would you bet on any of these names which would be buying opportunities, taking the outlook for FY26 into consideration as well?
Well, I'll go for a Bank of Baroda. No, it's a safe bet. And if you see the PSU banks are doing well, even though they are aiming to double their balance sheet in next 5 years, and the loan growth is almost double digit, 15 to 20%. That is what they are targeting. It will be there. Plus, no, if you say the gross NPA, net NPA are much more in a control, slippages are much more in a better position. Net interest margin improvement is there. I think advances are going to grow around 12 to 15% in next few quarters also. So yes, Bank of Baroda is the one stock now. I think it's a safe bet one can bet, and even at this level they can start buying.
One thing, Mahima, I want to note over here is Tapan is actually, in spite of these kind of gainers, he's trying to play safe in this kind of a market, which actually tells you what the market mood is like as well. Yeah. With us, Tapan, I would want to take a question with you on the stocks that actually, Sharad took us through from a Dodla dairy, which has been trading under pressure, and the others as well. Taking the fundamental view of these, someone who's holding any of these names, would you advise them to sell and book profits at this juncture, or what would you do?
Out of this, I think Dodla Dairy is quite interesting. Now, of course, its result was not so great, but I think next few quarters will do well. And if you see their value-added products is also increasing to almost 27%. Their international business is giving double-digit growth, and gross margin is slowly and gradually in next few quarters will increase. Of course, they are doing some acquisition, and if you see the PAT improvement will be there in next few quarters. So even next few quarters, I think now the demand will be back. So yes, Dodla Dairy is one stock now you can start using it to accumulate. Other stock, Tata Chemical, I am not too much positive. Chemicals stocks, is still in stress, and again, still the overall sector is also in a pressure. So yes, Dodla Dairy will be one can think about buying.
All right, and Dodla Dairy is something that we're talking about at this point in time. But tell you what, let's also take a look at UrbanCo on the back of that revenue uptake. 37.1% is something that we saw coming in. Tapan, just very curious to try and understand your take on this as well. You've seen the net losses widen. You do have the revenue that has seen an uptake of about 37.1%. How are you placing this counter then?
See, you know that from the date listed, it's been in a little bit of pressure only. Even if you see some of the issues which is happening, they have a vertical loss is almost 44% in Insta Help, and upfront investment and onboarding cost is much on a higher side, and that is where the losses are continuing there. And see, as an investor, you have to see at the end light at the end of the tunnel. Unless it becomes a little bit profitable, and overall it gives sequentially a quarter to quarter profit. There will be a pressure on this company, and still the competition and margin pressure is there. This is the space where a lot of competition is entering. No doubt they are the leader, but still I feel that there will be a lot of company which will have issues on their profitability. International business slowly and gradually are getting break even, but still I think one should stay away from this stock. Let it stabilize, and quarter to quarter, once the profitability comes, I think then start of thinking of getting into it.
Tapan, I wanted to understand what you think about some of these counters. Of course, there's Titagarh Rail on the back of that order, and it's quite a big order that you're looking at there. For Titagarh Rail, what are you making of this particular counter then?
Titagarh, yeah, of course, order book is good, and even this order is big. And actually, last 2 quarters was not good for Titagarh. One of the reason was that they're not getting the main component on time. But I think from here, I think that problem is solved now, and I think this quarter may be good, and next quarter also. And of course, this order book is quite good. Overall, I'm quite positive in the way the orders are coming for the railway, and in future also it will come. And of course, they are improving their margins, and they already told that even passenger rail business also at almost increasing at around 50-60% share, and that is having a double-digit growth. Capacity expansion is there. So yes, I think Titagarh still from valuation point of view, it's quite cheap. I think one can get into it for long term.